Hi folks, thank you very much for joining us on Who Moved the Market. First and foremost, if you are celebrating Holi today, then we wish you a very, very happy Holi. And we're going to talk about a stock today which actually has chosen the color green. Considering we're still talking about the Festival of Colors. IndusInd Bank is a stock in question, and you might be wondering that on a day when there's been so much talk about banks, interest rates, turbulence, what the Fed chair is saying, how is it that this stock is holding up so nicely in positive territory? Well, the answers are right here between these two wonderful people. We have Latha joining in with a lot of the perspective, and Abhishek will tell us more on the financial performance and what the street view on IndusInd Bank is. So thank you both of you for taking out the time. Latha, let's get to the juicy part first. The news. You're learning that Mr. Kathpalia's tenure might see an extension?
Yes, that's what banking sources tell us, and people who are usually very, very reliable tell us that the Reserve Bank is reasonably happy with Kathpalia's showing so far in the previous term, which is going to end on March 23rd. And the board had already given him an extension of 3 years starting March 24th, but all these extensions are subject to RBI approval. And so our sources tell us that Reserve Bank sounds reasonably happy with his performance, and anyway they don't want instability. Therefore not 1 year but 3 years is what we are picking up.
Okay, and we should get perhaps that announcement over the next couple of days, 24th, 23rd, 24th, you said.
I don't think they'll push it all the way to the wire. I hope not.
Okay, so before we talk about, the financials and how the bank has been doing, Latha, just a word on what the last 3 years under Mr. Kathpalia have meant for the bank. He came in when the COVID wave was just about hitting us in the face, and he took charge. So what's his legacy like, if I could ask?
Well, you will have to give it to him, and Abhishek will tell you chapter and verse with the numbers, that he's rendered a fairly decent account on all parameters. Most important is deposits. Because when he came, not just IndusInd, private sector banks themselves, especially the mid-cap private sector banks, were undergoing turbulence. There was that legacy of having lent to IL&FS, which was dogging only IndusInd. But more than that, the Yes Bank episode. And then there were other slightly dibbly-dobbly like PMC and this one, LVB, Lakshmi Vilas Bank. So there were people pulling out deposits because of the moratorium in Yes Bank. Even state governments were pulling out deposits from mid-cap private sector banks. So to have stabilized that, and he will give you the numbers, he's done a damn good job of getting back the deposit franchise. The numbers are very impressive. And this, to be fair, was abetted by the general system. Reserve Bank's easy money policy, all that helped all banks. But to be fair, IndusInd under Kathpalia's term took good advantage of that. The second big achievement, I would say, is to put behind that whistleblower. There was a whistleblower who said that the MFI loans were, Emma Rao had written, saying that the microfinance is evergreening the loans. Actually, they extended it without taking permission because it was difficult in COVID time to take permission from everyone. That was the bank's story. But the point is, it was handled well. Putting up a committee, satisfying the Reserve Bank on it. That, I think, is another important achievement. And the third is, of course, general diversification of the loan book. So, cleaning up of the loan book. After all, everybody was in turmoil after the asset quality review, and IndusInd in particular. I think that also is a decent job.
Well, I'm just looking at the share price right now. If you're talking about Feb 2020, from levels of around, 1100, 1200 when the COVID crisis hit us, obviously the stock went down. But from the depths of the crisis, the low I can see right now is just below 400. From there all the way to almost 1150. It's been a great journey in terms of just the share price appreciation. But, Abhishek, come in on some of the points that Latha raised. Obviously, they've been improving their deposit base, as she's pointing out. Asset quality in general for the system as a whole is improving. But financials, what really stands out for you when it comes to IndusInd Bank in the last 3 years?
Well, as Latha mentioned, deposit growth has been pretty robust. Take a look at the credit deposit ratio. It was above 100% and they brought it down to below 84% as of Q3. And this was under Sumant Kathpalia's tenure as well. So 102.4% was the CD ratio way back in Q4 FY20 when he took charge. And it is now at a little less than 84%. And that is where the deposit picture has come in. They have gained market share in deposits, but almost a flat market share in the loans. However, the loans is not a small growth. In his tenure, the loan growth has been around 32%. But deposit...
That's over the entire 3-year period.
Over Q4 FY20 to Q3 FY23.
Okay.
Oh, in that period, the loan growth has been around 31-32%. However, deposit momentum has been at 61%. Wow. So he's brought down the CD ratio, which was one of the key risks for him in terms of growing the balance sheet going ahead. Any bank would need deposit to grow their balance sheet. So from that perspective, deposit momentum has really worked well for him. However, it's not translated into net interest margin, given the fact that net interest margin is largely flat on a 3-year period under his tenure, from 4.25 to 4.27. I mean, it's been in that range only. And the return ratios before he joined to now remain almost the same. So he's managed the bank really well. He's de-risked the portfolio in the bank in terms of risky assets. So if you take a look, the LAP book, loan against property book, that is down to about 110 basis point in terms of percentage of the loans. And CV, commercial vehicle, is also down. And your MFI portfolio, which Latha spoke about, over there also the share in the overall loan mix has reduced by 80-85 basis point in terms of the overall share in the loan mix.
So those are some very important points, that, as you're saying, de-risking the balance sheet, shoring up deposits, and that's a very impressive 60% plus. Just quickly, in terms of growth areas, in an environment over the last 1 year, anyway, for most banks, loan growth has been fairly steady. You've told us about the areas where they have de-risked for obvious reasons. In terms of fighting for more loans or fighting for the retail market, how do the numbers stack up for this bank?
So if you take where the loan growth has come, the retail book has shrunk. Okay. So which has grown? Corporate. So corporate, share in the loan mix has increased by about 240 basis point in the same period. That is when he took over to the previous quarter, that is Q3 FY23. So they have focused. They were earlier also in corporates, but right now, since they focus less on risky assets, they focus more on granular asset, and this can be seen in their overall risk weight asset to advances ratio. So risk weight asset to advances ratio was around 125% level. That's declined to 118%. So which is showing you that the bank is trying to lower the risk in its balance sheet.
Which explains why the NIM is not grown, because they are, when you lend to less risky, you're also
giving up on yields. You're giving up on yields.
Which brings me to the next interesting part of this conversation. We are in an era where so much is happening with private banks. When we've just seen Axis complete this aggressive move with Citi, and you were speaking to Mr. Chaudhary earlier, and I think the banks have been very vocal about how they really want to go ahead with the unsecured part of the book, get better yields, get these high-yielding clients on board. Now that's Axis's strategy. Latha, when you talk about the road ahead for IndusInd Bank, whether it's under Mr. Kathpalia or someone else, what do you think the market will watch out for, or what are the next triggers or challenges ahead?
You summarized it very well. First of all, where we ended the conversation, margins, is going to be an issue, because the way costs are rising for even in the US. No country can have a lower return, and when the risk-free return, when the dollar yield, look at the 2-year is yielding 6% almost. So why would you want to give money elsewhere? There will be, money gets costlier for everyone. So if he is going to give more on deposits, which he will have to, and HDFC's bank is raising deposits aggressively to compensate, to make up for the HDFC book, which will be part of its book maybe by June or July. So there is a race for deposits. Margins, maintaining it will be difficult. So how much riskier can you get? Sumant, I think, has spoken about affordable housing and all that. You'll diversify into less risky portfolios. These are not very high yielding ones.
And they're also lower ticket size. So you'll have to
more
actually
work, cost.
do a lot of work, in terms of getting your returns on that portfolio.
Operational cost is higher, the smaller the ticket loan. And likewise, the big challenge for all banks, and that will include someone like IndusInd, which also has MFI portfolio. You have to move to expected credit loss regimen.
Oh yes, that's the
big one that's coming. Now, of course, all banks will get enough time to do it, and SOPs in the form of how they use their capital. But nevertheless, when you have a lot of small loans and you have a lot of MFI, your challenge is a little bit more than someone who has more safer loans.
I'm just, for the sake of viewers who might not have followed Latha's earlier piece on what is absolutely a phenomenal change in banking, expected credit loss, just for the sake of clarity, my understanding, please correct me if I'm wrong, is that as of now, banks have to start providing for a loan if it is not paid 90 days past. In the new regime, they'll have to start setting aside some money for loans that could go bad.
Yeah,
That's what we're talking about.
So
right?
you look at the overall book, what has been the historical NPA, and provide a part of that already. Now banks provide 0.25. They'll have to provide more. But if you have more of an MFI book, if you have more of a small loan book, there the rate of NPAs could be higher. Such banks may get a slightly higher expected credit loss. We don't know. All these models will have to be built and will have to be okayed by RBI. I'm just saying these are the challenges that Sumant Kathpalia will face if he is the one, or whoever is in his place will have to face these challenges. Margins will be a challenge. Diversification, loan diversification, because everybody is in the retail game. So that will be a serious challenge. And, things like expected credit loss, which is an upheaval of sorts.
Yeah.
It's revolutionary. You have to go through, and technology. I mean, you would invest so much more in AI or apps because everyone else is doing that.
Absolutely.
So those will be the regular challenges for everyone, more so for
I think banker these days anyway has to go ahead and wear a technologist hat as well. Absolutely. You need to have a dual personality to get by in the world of banking and payments today. Abhishek, okay, quick final thoughts then. View from the street as yet, if you've pored over any of the recent brokerage commentary, what are people saying?
Well, the concern has played out. The concern has been taken care of. So, street remain positive on the stock. You have brokerages like Morgan Stanley, Jefferies, CLSA. They are bullish on the stock. They have a buy or overweight recommendation. Target price ranges from 1500 to 1600 kind of a range. And this was the key catalyst that they were waiting for. A CEO's tenure extension, 3 years, very good. If it would have been 1 year, then the street would have taken it negatively. But as Latha said, it's 3 years. A 3 year for the same management to continue augurs very well for the stock.
Okay, and let's see, I mean, as and when if this news is finally confirmed and put out by the Reserve Bank, we'll probably see brokerages kind of come up with new notes and maybe even rework their targets. But thank you very much, both of you, for enlightening us on this subject and this very interesting story and the trajectory ahead for IndusInd Bank. All right, thank you very much, folks, for tuning in. Remember, we bring you one interesting conversation from the market every day, just around 2 o'clock in the afternoon. Do keep tuning in and keep sending us your feedback, your comments and queries. Thanks for watching.